With over $190 billion in total volume, 450 plus markets, and real world assets coming on the way, Variational is quietly becoming one of crypto's largest perps platforms. So in this video, we're going to break down how Variational works, what they have coming up in the future, and how Arbitrum strengthens their core value proposition of one of crypto's biggest perps platforms. Variational's core product is Omni. It's a perpetual futures platform, and similar to other perps platforms, it lets you trade movements long and short without owning the underlying asset using leverage. But where it gets interesting is actually how they structure the liquidity and execution. I'm going to go through some of the key differentiators that Variational offers that does put it apart from some of the competition. The first is being deep aggregated liquidity that Omni is able to offer through the OLP, which is essentially the Omni liquidity provider. In a nutshell, it aggregates liquidity from different things like centralized exchanges, decentralized exchanges, DeFi, and even over-the-counter desks. But the main thing here is that the OLP acts as a counterparty to every trade that happens on their platform. And it essentially is able to do so and use its own market-making strategy to essentially find the most efficient prices available for people who want to trade. But what that means essentially is tighter spreads, better execution for larger trades, and of course, competitive pricing across a ton of different markets, making it a great place to trade almost anything. And some recent upgrades that they've actually pushed has actually made Omni one of the best places to trade Bitcoin in size across major different perps platforms. Even if you scroll down on this post over here, you can see Max, one of the folks from the Omni team, shows off that Variational very clearly has some of the tightest spreads across all markets. Now, obviously, exact numbers will change from time to time, depending on when you're looking at the website, Liquid View, but the same remains that the goal is to have the lowest execution cost in the market by the Variational team. The second key differentiator that Variational's Omni offers is massive asset coverage. So as you can see, Variational lists literally hundreds of markets, including some of the majors like Bitcoin, ETH, Sol, meme coins like Bonk, Pepe, stuff like that, as well as a long tail of tokens that you probably wouldn't expect to find on a DEX, let alone a perps DEX. And more importantly, they're pretty quick at being able to list new tokens, or even in general, just tokens that they don't have currently available. The process that they have currently is quite automated, and it's much faster than most other perps DEXs. And it's probably one of the biggest key differentiators that you're probably gonna see, and really just allows you to trade almost anything on this one exchange. As you can see, I can probably go through all 24 pages of these different assets, and I'm probably going to find that most of these tokens you probably can't trade anywhere else on chain. One of the third key differentiators for Variational's Omni, and it's probably one of the most important ones, is that there are zero trading fees. There is a deposit and withdrawal fee that does equal to around 10 cents, but there is no explicit trading fees, and costs are essentially embedded into the spreads and funding. So the reason why this matters, at least probably for traders, is that you have a much cleaner UX in terms of, what the breakdown cost is when you do want to execute a trade. You have more predictable execution costs when you are trading. And of course, this model is a lot more attractive for high frequency traders that would usually incur tons more costs on exchanges that do charge you per trade. The fourth key differentiator for Variational's Omni is the custom Oracle system that they have. A lot of other different perps platforms usually use one Oracle, whether that be on-chain or off-chain. In this case, Variational actually uses a price aggregation system where they're able to pull from centralized exchange APIs and on-chain fees. So both on-chain and off-chain in this case. But with this system, they're able to combine this into one unified price feed for each token. And that matters because you have much more accurate pricing across all these different fragmented markets. And of course, it's better consistency for execution and liquidations in terms of making sure that you know what the price is going to be by aggregating all of them in the background. As you probably know, there are some oracles out there that do aggregation themselves, in which case the perps exchange will then feed from there. But I think it's worth noting that Variational does the aggregation themselves in-house instead of allowing that to be outsourced to another Oracle provider. And one of the last ways that Variational's Omni is able to differentiate itself from other perps platforms is its reward system, as well as a loss refund design mechanism that they recently sunsetted, but we'll go into in a sec. The reward system, as you can see, is point-based, and it's tied to 30-day trading volume. It has a tiered structure, which means the higher the volume you do on their exchange, the higher the tier. And of course, the higher tier you have, the more boosted points you get as well. They also recently sunsetted loss refunds, which is a gamified feature where losing trades could actually be fully refunded back to the end user. This was obviously not for every person on the platform. It was kind of like a gamified thing where only a small percentage of people would be eligible for this. But they sunsetted it, of course, in favor of more consistent rewards, spread rebates, and of course, less Sybilable incentives. But essentially, it's less of like a lottery kind of thing and more just a way to bring protocol revenue back in, allowing them to build a system that's able to benefit most people instead of a small amount when they're lucky. All right, let's talk about what could be coming up. So the number one thing I would say is real world assets, RWAs. This is definitely one of the biggest unlocks they could add. If you've seen one of the previous videos we put up on this channel, you'll know that real world assets, commodities in particular, are actually overtaking volume and in terms of just market share, user demand, for most perps platforms that have them integrated, like even more so than crypto. Essentially, there are more people on chain trading commodities, real world assets, than sometimes crypto, which is crazy. So this would be a huge unlock for Variational, but from X and Discord, you can find that they're actually looking to integrate stocks, commodities, and other types of real world assets, as well as looking to integrate with some of these traditional finance liquidity providers to make sure that they're offering incredibly tight spreads and funding rates across a huge set of these markets. So essentially, they're trying to stay competitive. They want to be competitive when RWAs come out with the current offerings that are currently out there. And of course, the other thing I wanted to mention that they haven't spoken a ton about, but I think should be coming this year, is the Pro experience. So essentially kind of the level up from Omni. And what you can probably expect from Pro will be more advanced trading tools, a better UI for high volume traders, as well as potentially institutional facing features that Omni just doesn't currently have right now. So very quickly, why does Arbitrum make sense as a home for Variational? And why does it make sense in general for Perps to call Arbitrum home? Let's jump right into it. So as you can see here, Arbitrum is already essentially at the center of gravity for Perps in all of crypto. It has the deepest liquidity, the most active traders, and probably the strongest ecosystem for all of Perps protocols. The capital is already here. As you can see by this diagram where the information was taken from DeFi Llama, essentially 75% of all Perps platforms is somehow tied directly to Arbitrum. Now, of course, 15 to 16% of that is directly on Arbitrum 1 or an Arbitrum stack chain, with of course 60%, most of it being hyperliquid, using Arbitrum as capital sourcing. But the point kind of remains that a lot of liquidity flows in and out of Arbitrum because it just happens to be the home of Perps where capital is extremely liquid. The second reason why Arbitrum makes sense is because it has low fees at scale. Now, with the recent upgrades that Arbitrum has seen, if you haven't seen, we put a video about that as well, ArboS 51. Absolutely massive upgrade that allows Arbitrum to be able to handle massive throughput, the type of throughput that no other chain has seen during some of these very, very volatile moments within the industry the last couple of months, but also at the same time keep fees extremely low even during that congestion, even lower than its competition like Base, like Optimism, and other L2/L1s. The reason why this matters for Perps is because during volatile market conditions, you want to make sure that people are able to constantly trade. You want to make sure that when they are trading, they're able to do it at a high frequency. And of course, the margins need to be as tight as possible so they have the best prices available to them. And that only happens on a platform that can sustain low fees during extremely high demand, alongside able to process so many transactions at once. Pretty much fees and throughput does impact viability, and Arbitrum kind of just minimizes all of that. Lastly, as we move towards a world where the economy is slowly becoming programmable, essentially things are coming on chain, where smart contracts and chains are acting as the intermediary, Variational doesn't really just stand out as a trading app, it's really kind of infrastructure for on-chain markets, tokenized assets, and of course, always on liquidity. And Arbitrum as a platform is the best place where the programmable economy can grow because of its neutrality, because of its incredibly deep liquidity on Arbitrum 1, and because of the incredible customization it has on the Arbitrum stack chains, the likes of which Robinhood is building their own stock tokens on. So the end state, as most of you probably already know, is that Perps isn't just for crypto anymore. It's essentially the rails for any asset. That being said, what do you guys think? Have you used Variational before? Do you plan on using it? Are you excited for real world assets to come? Let me know in the comments below. And if you want a code to start using it, since it is currently in private beta, use the code Arbitrum to sign up immediately. See you guys on the next one. Peace out.